Hi everyone, welcome to a brand new episode. I'm Marcus. Today we're looking at CostCo, ticker symbol COST. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and a technical analysis of the stock. Should we be buying the stock right now? Let's find out. As I mentioned, we're going to take a look at CostCo, ticker symbol COST, and CostCo Wholesale is engaged in operation of membership warehouses in 14 countries such as United States, Canada, UK, Mexico, just to mention a few. The company offers merchandise in various categories, which include food, beverages, electronics, small appliances, and much more. And they have 828 locations as of December 31st, 2021, and more than 300,000 employees worldwide. Last year, they faced a lot of challenges in the form of supply key commodities, transportation capacity, labor shortages, inflationary factors such as higher labor and freight costs, greater transportation and container demand, and scarcity of certain products really put pressure on the company. And Costco stated in their annual report that they work with suppliers to explore methods to control costs and avoid and minimize price increases. And last year, they opened up 20 new warehouses and are expected to increase the pace this year. In fact, they have already opened up 13 new buildings, and they also operate 8 e-commerce websites worldwide, and sales grew by 44% over the previous year, which is just amazing. And they continue to focus on complementing their core warehouse business with their online offering, which is just amazing. The key to Costco's business is that they operate membership warehouses and e-commerce website with the goal of offering their members low prices on a limited selection of nationally branded and private label products in a wide range of categories, which is produce high sales volume and rapid inventory turnover. They operate in a highly competitive industry, which is based on price, merchandise quality and selection, location, convenience, distribution strategy, and customer service. They compete on a worldwide basis with global, national, and regional wholesalers, and some of their competitors are Walmart, Target, Kroger, and Amazon, just to mention a few. As any business, there are risks associated with it, and some are the fact that Costco are highly dependent on their US and Canadian operations, which stands more than 80% of their net sales in 2021, and they are also highly dependent on the California operation, which stands for more than 20% of the sales in the US. This is something they need to work on, and as for investors, something to really keep an eye on. So what are the things you should be studying in order to keep an eye on the business? Well, some of would be general economic factors such as domestically and internationally, and those factors are, for instance, higher energy and gasoline costs, inflation, levels of unemployment, healthcare costs, consumer debt levels, foreign currency exchange rates, unsettled financial markets, weakness in housing and real estate markets, reduced consumer confidence, changes and uncertainties related to government fiscal and tax policies, duties, and tariffs are some of the factors to keep in mind. Basically, you need to be on top of what's going on in countries Costco operates in, and they are operating in more than 14 countries, which is a lot. But we know for a fact that there are have more than 80% of the sales comes from US and Canada, so that's where I would put my energy on. So let's jump over to the metrics and let's head over to the screen, and we can see that they are traded on NASDAQ and are in the trade and service sector. Their market capitalization coming in at $230 billion, and their revenues at $203 billion. A PE ratio coming in at 44.6. Now guys, I like companies with a PE ratio of 20 or below, so having 44, that is just too high for me, so that is a no. But guys, when you see a stock with a high PE ratio, that basically tells you that the market expectation of that stock is high, and therefore you might see capital gains on those stocks. But the overhanging risk here is that if the company doesn't meet those expectations, we will see the stock price fall. The same thing as we saw on PayPal and Netflix. On the other hand, when you see a stock with a low PE ratio, that tells you that the market expectation of that stock is low, and therefore you might not see capital gains on those stocks. So having a PE ratio of 44, that is a no for me. That is too high. Now profit margin coming in at 2.5%. I like companies with a profit margin of 15% or higher. So 2.5%, that is just way too low for me. So that is a no. Now, when you see price to sales ratio coming in at 1.1, I like company with a price to sales ratio of maximum 4. So having 1.1, that is within my range. So that is a go for me. Price to book value coming in at 12.4. Normally, I like companies with a price to book value of maximum 3. So having 12.4, that is just way too high for me. So that is a no. So if we were to summarize, PE ratio is too high, price to sales ratio within my range, and price to book value is too high. This tells me that Costco at its current state is overvalued. Now they pay out a dividend of $3 per share. I like it. I like those recurring income, so that is a plus. Effective return coming in at 0.61%. That is just way too low for me. I would like to see at least a range between 2.5-3% or higher. So 0.61, that is just way too low for me. So that is a no. But I want you to be very careful when it comes to effective return, because there are those stocks that have a high effective return, but that could be a trap, because you might get a good return on the investment, but if you look at the chart, a historical chart, you might not get capital gains on those stocks, meaning that when it comes time for you to exit those stocks, you might not get a higher price what you bought it for. Just keep that in mind. Return on equity coming in at 30%. I like it. Return on equity tells you about a company's financial ability to create a return on their equity. And as for an investor, it tells you about the company's ability to create return on their capital you're about to invest in them. So 30%, I like it. So that is a go. Return on asset coming in at 7%. I like that. So that is also a go for me. The stock is currently traded at $529 per share. And if we go down to the moving average, we can see that we are above the 50-day moving average and also above the 200-day moving average. This is an indicator telling us that we might see the stock price increase. But let's take a quick glance on the chart, and we can see that we have been moving in within a positive trend channel for quite some time, but have lately seen a lower numbers, and we can see just quite frankly that a triangle is forming, and that we might see price go up something like this. But we'll take a closer look at the technical aspect further down. But let's jump over to the income statement, and what we're interested here is that the total revenue, we can see it went from $129 billion in 2017 up to $195 billion in 2021, and the numbers have been growing steadily every year. I like it. Gross profit went from $4.1 billion up to $6.7 billion, and we can see that the numbers have been growing. We fell off in 2020, but overall trend is positive. I like that. Net income went from $2.7 billion up to $5 billion, and also the numbers have been growing steadily every year. I like it. So that is a plus. Let's jump over to the balance sheet, and what we're interested here is that the current assets versus the current liabilities, and we can see the current assets is greater than current liability, not by much, but still more, meaning that if the company were to convert their current assets to cash, they're able to pay off the current liabilities, which is a plus. I like it, but they are far from being able to pay off the total liabilities, which is a negative. And if we take a quick glance on the total liabilities, we can see we went from $25.3 billion up to $41 billion, and the numbers have been growing steadily every year, and that is negative. I would like to see them start reducing the total liabilities. Let's jump over to the outstanding share, and we can see we went from 437 million shares up to 441 million shares, and the number have been growing over the last 5 years. This is negative. So what's happening here is that we can see that the numbers are increasing, meaning that there are more and more available shares out there, meaning that your share of the company is decreasing, meaning it's being diluted. If we saw the number decrease, that means that there are fewer and fewer available shares, meaning that your share of the company is growing. And there's a lot of investors that either skip this part or doesn't know about it, and they see a company with a strong balance sheet, for instance, that they have a lot of assets and the debt is not growing that much, which is great, which is positive. But on the other hand, we see that they are issuing more and more shares, and that's a way for a company to bring in more capital without taking on more debt. So keep that in mind. keep an eye on the outstanding shares. Now let's jump over to the balance sheet, the cash flow. And what we're interested here is that the operating cash flow versus the capital expenditure. And we can see here in 2021, operating cash flow landed at $9 billion and the capital expenditure at $3.6 billion, making a difference of $5.4 billion. And that is a plus. And the operating cash flow went from $6.7 billion up to $9 billion. We fell off in 2018 and then have the numbers been growing ever since. That is a plus. Capital expenditure went from $2.5 billion up to $3.6 billion, and the numbers have been growing. We fell off in 2020, but overall trend is positive. I like it. I like the fact that they continue to invest in the business. Now let's jump over to the key figures, and what we can see here is that the earnings per share went from $6 per share up to $11.3 per share, and the numbers have been growing steadily every year. I like that. Revenue per share went from $295 per share up to $443 per share, and the numbers have been growing steadily every year. That is a plus. Equity per share went from $24.6 per share up to $39.7 per share, and the numbers also have been growing steadily every year. That is a plus. We fell off a bit in 2021, but overall trend is positive. Dividend per share went from $8.9 per share up to $13 per share, and they reduced the payout a couple of years, but have then increased it. So that is a plus. I like it. I like those recurrent income, and also I would like to see a steady increase yearly by seeing that they have taken up their payment. That is great, but I would like to see steady development. So that is a plus. Dividend share, a bit of fluctuation here. We see that 145, 114 and 21, 28. So this is negative. I would like to see a company that pays out less than 60% of the capital, because I want some of the capital to remain in the business for investments, for acquisition, and just overall strengthen the business for uncertainty. So seeing that they've been above 60%, that is negative. Gross margin went from 3.19% up to 3.4%, and we can see we fell off here, and then we improved, and then we fell off again, and then we improved. So fluctuation here, but still overall trend is positive. I like that. But the gross margins is way low, below 15%. But we need to compare this number across the industry and see how CostCo is doing compared to the competitors. But I would like to see them improve the efficiency and improve those their operating margins. Gross margin. Operating margin went from 3.10% up to 3.37%, and the numbers have been improving. We fell off 1 year, but overall trend have been positive. That is great. Profit margin went from 2.08% up to 2.56%, and the numbers have been improving every year. That is a plus. I like it. Return on equity, as I mentioned, tells you about a company's ability to create return on their equity. And as for an investor, you want to make sure you have a company with a positive return on equity, because that tells you that they are able to create return on the capital you're about to invest in them. And we can see that they went from 24.8% up to 28.5%, and we fell off 1 year and a couple of years here. So overall trend here is negative. They improved the numbers in 2021, but overall trend is negative. But even though these are great numbers, but the trend here is negative. Return on asset went from 7.37% up to 8.45%, and the numbers have been improving. We fell off in 2020, but overall trend is positive. I like that. Solidity tells you about a company's financial strength for the long term, and we can see here that we went from 29.6% up to 29.63. So we fell off a bit, but overall trend here, we can see that we have been improving. We fell off in 2020 and then fell off again. So overall trend, is this a counter trend? So this is negative. Balance sheet liquidity, same thing as solidity, but here it looks at the financial strength for the short term, and we can see we went from 2.2 2.2 up to 2.68, and that the numbers have been improving. We fell off here in 2020, but gained a bit in 2026. So this is a positive. Debt ratio went from 2.34 up to 2.35, and we can see the numbers have been decreasing and increased a couple again here in 2035 to 2.35. So this is negative. So debt ratio of 2.35, that means that they had 2.35 times more debt in the equity, and seeing that the number is increasing, that is negative. So guys, we have gone through the income statement, balance sheet, cash flow, the key figures. Now over to our key feature, which is the stock analyzer. What the stock analyzer is that it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. If we go down to the screen, we can see that the PE ratio is above 20, which is negative. The company pays out a dividend, which is a plus. Dividend payout share is greater than 60%, that is negative. Dividend increased over the past 5 years, that is a plus. And numbers of outstanding share have increased, that is negative. Revenue increased over the past 5 years, that is a plus. And profit margin below 15%, that is negative. Profit increased over the past 5 years, that is positive. Current assets is greater than current liabilities, that is a plus. Solidity decreased over the past 5 years, negative. And balance sheet liquidity increased over the past 5 years, that is positive. Debt equity ratio increased over the past 5 years, negative. And total liabilities have grown for the past 5 years, that is negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. And you can have this software along with everything we've gone through for only $10 per month, and you can have access to our discussion forum where you'll be able to chat with me along with other members. So make sure to head over to comus.se and become a member today. Okay, thank you. But now let's jump over to the technical aspect of the stock. So here we have the chart. Let me just lay down some lines, and let me do a support line, something like that, and let me do a resistance line, something like something like that. Okay, and we can see here that we have for quite some time been moving within a positive trend channel, and lately during February, March, we could see that the price have increased and even broke out of the channel, and then did a retest, touched the support line, and then move for a higher levels. Normally when you see something like this, that it breaks out of the channel, what I do is that I'll wait for the price to go back down and do a retest, and if the price increases and breaks this area, then that's a buying opportunity for me. And we can saw the price increased and then hit a ceiling here, and then the price came back down to what is now a support line. So what we could see here is that we could see that the price increase and touches this resistance level, and we could see a double top formation here, and then the price goes down. And if it breaks this level, then we know that the double top is a confirmation, and then with that we might see the price go back down to the channel. But normal behavior is that we might see the price go back up again, touch the resistance level, and if it breaks below this area right here, then we know it's a confirmation that we might see the stock price continue to move lower in the channel towards the support line right here. And I believe there will be a lot of buyers waiting to enter this stock, and we can see that we have been in this range before, meaning that the support line may hold, may be a strong one, a key levels here. So if the price were to move down here, I'm most certain that the price then will move back up again. A lot of buyers will enter and push the price even higher. So, but a different scenario is that we could see that the price consolidate for quite some time, or that we might see something like this. If we take a look here, we can see that we have an ascending triangle formation. So we could see either that the price continue to break even higher. That's one scenario. Another scenario is that we see consolidation, that the price continue to move within this area right here, also moving within the ascending triangle, meaning that price may continue this way and then push for even higher levels. Or a different scenario could be that the price hit these levels and form a double top formation and then breaks below down here, and these will be key areas to watch out for, because we could see either that the price continue to buy or fall back down. But what normally what I do is I want margin of safety, meaning that I won't buy up here because there's a huge price movement here, meaning that I'll be losing a lot of money. So what I do is I rather wait for the price to hit these levels. If we break above this and do something like that, then here would be a buying opportunity. Otherwise, wait for the price to move back to a strong support line, because meaning that your safety margin of safety is higher down here, also that there are a lot of more buyers up here. So that's what I would do. So that's how I would trade the stock. How would you trade the stock? Please let me know in the comment section below, and also let me know if you have any questions or have stocks you want me to look at. And as always, guys, please do your own analysis. Thank you so much for watching. I truly appreciate it. And if you have enjoyed this episode, please give me a thumbs up, comment, subscribe. And until next time, guys, take care. Bye-bye.